Yes, my name is Jeremy, and welcome to the Young Media Professionals Podcast Show, where we have entrepreneurs and investors share their experience and advice with us. Today, our special guest is Nico Wilson, and he'll be sharing his knowledge with us today. Welcome, Nico.
Thank you.
How are you doing today?
I am good.
Yes, that's great. I have you here because you're a trader, investor, and I'm here and I'm glad for you to be here. And I hope you could share to the people a little bit, your strategy and a little bit of what you just do. So before we start, I'm gonna ask you, tell me something about yourself.
Well, yeah, as you can hear from my voice, I'm from St. Martin, and
Yes.
I basically came up in Holland to study, like everyone else, and then I met trading in my first year of study.
Okay. Uh, and what basically is a trader? What is a trader? Or let me say, what do you call yourself?
I would say I would not call myself an investor or trader, because if you do a lot of studies and these type of definition for these terms,
Hmm.
is that you have to be trading a certain amount of capital in order to say you are a trader first of all. So
Okay.
if you probably handling like 5+ million in asset that you have under your management, then you can hold a title because it shows you have good stress level to control money when it's required.
Hmm. And what sectors do you trade in the market?
So they have about 11 to 12 sectors in the market overall.
Okay.
So you have the stocks part, and basically including currency, it's also a stock. But
Hmm.
what I mean stock is more with businesses. And you have this particular part where it's in the financial, which is the currency part. And when you take out the currency part, then you come to this forex market, which everyone is doing at the moment, and I'm also doing that.
Hmm. And can you give us a little definition or your example, the difference between a trader and an investor?
Yeah, I investor. So a trader, they have timelines as well as investors. And timeline, I mean holding periods. So some traders, you have different traders in categories. So you have the scalpers, the so-called swing traders, which I will get more into that, which I don't consider them as swing traders. And you have people who so-called investors. Now, with the investing side, they tend to hold trade positions for about 5 to 10 years to see that money accumulate. And investors more depend on dividends payment
Hmm.
because dividends is like a savings to investors that compounds over time because they keep
Okay.
reinvesting back into the company. A trader now, he doesn't get any value from the currency he trades. He only get value based on the price increase. So there's nothing to gain from forex when you look at it in the long run. It's only a short-term play. It's not really a long-term game.
Hmm. I have you here because you also came from not being consistent to consistent in the market. So, what was your steps of being consistent?
Yeah. So consistency, right, is a very hard position to reach, um, because when you start as a trader, you look not I wouldn't say you're a trader, but when you start as someone who willing to try out the market, you start to look at YouTube, which is the first place, which is good. You research information base. If you're not doing it and you're just taking word of mouth, then I think you should change your mindset to more doing your research first,
Yes.
find out what is there, because every single thing in this world have risks,
Hmm.
and risks can be smart or it can be not so smart. So
Yeah.
when you find out the risk to it, now you need to make calculated risks, right? and with that you can say, okay, trading is, yeah, it's something I can make money, I can lose this amount of money, right? So when you start on this path of trying to trade, right, you find many difficulties and you find many different terms that you need to study beforehand in order to get the basic fundamentals. And once you get these basic fundamentals, like everyone else, you need to do something extra, right, to make yourself shine in the market, because the market don't like common people, because it takes money from common people, because common trading is what the market is based on, because the market understands how people already trading, technical retail people, including technical and whatever other method they use, they're still retail. And you got hedge fund managers, that, and also the bank, the big boys, well, the market makers,
Yeah.
and the hedge funds. They tend to be in the shadows. You know, they could be on your side. Um, no, no, you have to be on their side, not they could be on your side. You have to be on their side because they move more volume than you, and to them, you're like um, you're basically paying like some of their management fees. And for instance, maybe you're paying to manage the internet, or you're paying to do business, paying for them to go on business trips, which
Mhm.
probably in the thousands or 10,000. So they will most likely try to make money from you, and as well as other hedge funds.
Mhm.
And the path to consistency is understanding how these different entities trade or set themselves up to make money against someone else. And you need to know who is that someone else, because then you would see their mindset, and then you can branch out of this common trading. So when you branch out of the common trading, you start to see, okay, what am I trading currently that I am doing like everyone else? So for instance, everyone would go to do Bollinger Band trading. So that's a known method that everyone does. People will put stochastic on their chart, and they will put the RSI. So that's a known common method that everyone uses: Bollinger Band, stochastic, and RSI.
Okay.
And there's nothing wrong with using it, but you need to understand what you're looking for in order to get that extra piece out of the common trading, basically. So consistency is more deal with trial and error and understanding how you're reaching your goal.
One thing I talk about, and we also had him on the show, Johan Brooks,
Mhm.
and he talks a lot about macroeconomics. What is your understandings, and do you believe that is important to add macroeconomics to your trading?
I believe some people might say they don't believe in it, or they don't see the use of it, maybe because they making money once or twice there with technical, with purely so-called purely technical. But if you understand the macro part, you understand how the flow of money move, because it boils down to money, which is what you're trading. So if you understand the flow of money, you can understand how the market would behave based on a certain economic action. So it's very important.
Okay. So like you mentioned fundamental area, you also said technical. So which one you focus on more, or both of them is such important?
So when I started, as I said, like everyone, I started first with technical, and it's technical is it's easier to grasp it, like understand it a bit,
Hmm.
and like maybe like some common terms a lot of people use, and a lot of common things, some common pattern people will look at, maybe a pennant black pattern or a Batman pattern. They call it every all kind of strange name, but it's common name given to these common trading terminologies and patterns. So that's how I started, and then I say, you know what, like I only understand technical, but technical doesn't take you too so far other than trend lines, candlesticks, and some moving average or indicator. So when you start to study macroeconomics or fundamentals, um, you start to say, okay, how because every technical traders, every technical trader, they still use fundamental to some way because they have to check the news,
Yeah.
and it's hypocritical to not understand the news because the news is what have the volume in order for your so-called trading pair or currency pair to move. So fundamental is still something all technical traders use. Some of them might say they only use their so-called indicator or whatnot, but at the end of the day, it's a fundamental will move your trade, not your technical. So it's not backward. Your technical is just a tool to help you to navigate in the market. It's not the end all or be all.
Emotions, mindset, how important, because we see a lot of people posting strategies on Instagram, on social media, and it's a lot technical. How important is your mindset, your emotions?
So with the emotion part, you have to work with it, you have to live with it, and you don't have to suppress it, right? You just have to control it because if you suppress, if you for instance, if you ever see how a pressure cooker get ready to whistle, and you would open the pressure cooker top lid off, you would see it would blow. And that's the same thing with your emotion. When you suppress it for a longer period, you would always make mistakes, and then you will make one big mistake, and then you blow your account. And so you need to understand what is triggering me to do these crazy mistakes. And you would say probably it's your emotion, probably because you don't have money, probably you want to make money from the market, blah blah blah. So you need to get rid of the mindset of yeah, the end goal is make money. Yeah, everybody understand that, but get rid of the mindset of I have to make money. No, 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 no. The money will come to you. It will take care of itself. It don't need you. You notice you come in this market, the market didn't call you. You came in this market to take something from it. So it looking at you like, listen, if you want to take my money, you need to be above and beyond. And if you're not above and beyond, then I will take your money. So the market is also a person of its own self, but it's a more experienced person that's faster than you, more logical than you, and it it does make mistake at a certain time because the market movement and prices are based on macroeconomics, so there's a behavioral pattern. It's also based on algorithms. All algorithms have mathematical errors in them because no algorithm works 100% of the time,
And
but they tend.
can you explain a little bit what is an algorithm?
So an algorithm is a set of code. Is a set of code written in a script. They call it a script, and this script is normally what you use to write computer languages. Computer languages, C++, for example, and these are and R. So these are different type of languages that people write code in, and basically the algorithm come in a mathematical loop of equations. And these equations, they normally, if you look good into it, you don't even need to see the black box of how it's been coded. But if you understand how prices move and those things, you would see the algorithm does take fundamental into it in order to price something. And the algorithm would already take the effect of the prices long time before you. That's where the market move ahead before the news because it done already have the estimated or projected growth of what something would be because they have maybe say for instance we know USD started in 1996 in ICU, so that's when it started to trade on the international market. And so they have that whole period of years, right? And then all what you do in a so-called balance sheet is that the algorithm will just see the differences in how the growth is going, and it have these data, right? So if a news coming out and the news don't have this heavy impact on this movement, it will do a kind of strange move to fool you, and you might think it going up, and then the news will come up bad just for that day, and then no, not even for that day, just for that half an hour or an hour, and it make one big drop of a move. But then what you see then it reset because every single trading day have a trading range. And trading range could be in the form of pips, it could be in the form of bid ask price. So they have a threshold. If you look on the NASDAQ or any type of international world trading environment, you would see whenever a price moves too fast in a day, they hit the bell and the limit. They would hit the upper limit or the down limit, and this up and down limit need to take 50 minutes in order for trading to resume. So trading would pause in 50 minutes, and after 50 minutes is when the trading will continue because limits are set so that they don't pass the threshold because you break the system.
Wow. It's a lot of insight you will need to know in order to be consistent.
Yeah.
Strategy. Can you share one strategy that you use in today's market? Can you share with us one?
Yeah, I would give, I don't use strategies, I more use of how the market will behave. So I would give a tip, right? And
Yeah.
the tip is this. It doesn't matter what strategies you use, the important factor is not your strategy. Your strategy is not what moved the market. Again, there's the market will move the market and not your strategy. So no one care about your strategy.
Yeah.
So if you used Bollinger Band or RSI or moving average, no one cares about that. You need to identify the three cycles of the market. You need to identify when the market is trending. So trending have two terms: when the market is going up, and when the market is going down, and when the market is consolidating. Those three things is what the market normally does. So if you can identify those three type of pattern behavior, then you set up a strategy to either identify a consolidation market or identify a trending market. That's how you make strategies, right? You don't make a general strategies because the strategies won't work in all market. It's impossible. So that's why a lot of people tend to make a lot of mistake because they're not identifying, listen, the market move with consolidation trending, and it can go up or down, right? And that's why I said you need to know about yourself with if you're a buyer or seller. So if you know you are a buyer, that means your strategy is made for up movement. And if you know you're better selling, that means your strategy is protecting you from selling. But if you're going against your strategy, that means that's not your strategy. That's something you're just using for fun, and you understand. So to be honest, there's you have to understand more of the fundamentals of the market. Like the when I mean fundamental, I mean how the market behave. Because everything, as I said before, in the market is always some price data is getting from some report or some economy, and it come together to give you a certain pattern. And that's why I said that you have up market, a down market, and a consolidation market. And so I think the normal traditional line method you can apply, but you need to try to understand why the market behave like that or how it's moving. Probably a lot of people might not know, but you are trading candlesticks in the market, right? And candlesticks can be applied to all time frame, right? But what you need to understand with candlesticks is that they take time into consideration, and they take price, opening and closing. But the most important factor there is the time, the closing time of the candlestick. And I would emphasize what I mean by that. So if you look on a report that says that 90% of people fail or 80% of people fail in trading in the first 3 months, by the way, not in the year, in the first 3 months. So you might not even make it to the third month. You might blow your account in the first month, and that's because of risk, right? So it doesn't matter how good your strategy be if you can't control your risk. Just don't even try to look for strategies. But the main thing with a candlestick is you need to look at the candlestick as a data, right? As I said before. So you have a 5 minute time frame. So let me start over. You have a 1 minute time frame, you have a 5 minute time frame, you have a 15 minutes, 30 minutes, you have the 1 hour, you have the 4 hour, you have the daily, you have the weekly, and you have the monthly. All of them have candlesticks, right?
Mm.
And the thing you need to understand behind this is in order for the 5 minutes candle, one 5 minutes candle to form, you need 5 minutes of the 1 minute data to form one 5 minutes candle. In order for a 30 minutes candle to form, you need 30 minutes of the 5 minutes data to form that one 30 minutes candle. Same thing for the hourly candle. You need two of the 30 minutes candle in order for the hourly candle to form one hourly candle. So where I'm getting at is when you draw your trend line, right? The thing what you're looking at one daily candle to trade in one day. So if you're trading today, let's for instance today, when you look at the daily chart, you see a candle for today is trying to form. It's trying to make the opening and closing price, right? And the opening and closing price would only be solidified after that day's end. So when you're trading or doing your analysis or whatnot, you're trying to predict how this candlestick would close or how far it would close. And typically the market would use more of the previous day closing price to try to give some reflection of how the new day open price would be or the closing price would be. It can be further than that or higher than that, does not matter. So if you go on the daily and look at the previous day opening and closing of that candle, if it passes the threshold of that candle, you know it's increasing in more range. Range is the pips, right? And so when you look at the data, let's say for instance you want to trade 30 days of data, right? You look at the monthly chart. You want to look at the monthly chart because the 1 month of that candle has not been formed as yet. So what every trader is doing, every single trader, I don't care who they be, how professional they are, what every trader is doing, okay, and this is a fact. This is not or a theory or something you get from books, but this is a fact that all traders are trading that 1 month of candle. So say for instance, being August, the August month has not been end yet. So all of them are trading that one piece of candle and they're trying to identify where this candle will open or close and they're trying to get a position in there. So they will go now and look at the previous month data, which is July, and then they will draw the trend line on this previous month data. And then they would so-called get a trend line break, right? In maybe an up market or down market, and they would say, oh yeah, okay, the market is want to head up and whatnot. And if you look, they would probably show on the forward chart. If you look on the forward chart, they would show, okay, the market is going all the way up to this top. That top is the previous month high, right? That's what the trend line is. That's what they're doing with the trend line. Is the previous month high of that July month when you look at it from a lower time frame level. So what I'm saying might sound complex or you might not get it, but that's actually what everyone is doing because believe it or not, most people lose their money on 1 month of candle. 1 month they lose all the money on one candle,
Mm.
and that's where this whole thing go crazy, and people not realizing that they.
What would be your advice to understand money? Like something like the Samaritan of having their own currency and using guilders and using dollars. For somebody that don't understand probably why they getting paid guilders or getting paid dollars. What kind of understandings or what should they go to understand why St. Martin in a sense of undeveloped?
I don't think St. Martin is undeveloped. I think St. Martin have it don't encourage development, but it's not undeveloped. The development is there, right? It's because we already have a template of where St. Martin could reach, but you tend to see that St. Martin cannot do this stuff because they don't have finance. And if I can take people back,
Mm.
this is because we never as a people encourage saving. We never as a people try to budget. We try to spend the utmost that we make from our money, and we try to look flashy, buy expensive things that are probably cheap in some country, but you're probably paying a lot more for it because of the exportation costs. And people don't save on the island. They're more of a consumer base. They're more debt hungry. So with that, we have a society now where people just spending mad. And so when you create that society, right, it also reflect on every individual on the island where they don't have this practice of saving and budgeting and looking at the long term. We more as the island look at a short term approach. And when we get paying guildos, I think if you look at it from a bird's eye view, I think getting paying guildos is actually is good in some way, okay? I would say it's also bad, but it's good in a lot of ways because
Mm.
I think in more on a investing people deploying capital into the country. When you look at a guilder compared to the dollar, if for instance, let's put it this way, if we were using euros, yeah, we would get paid more a lot, right?
Okay.
But when more people try to make more business in our country, right? More people wouldn't because it's expensive. They would have to pay the exchange rate, right? So they wouldn't tend to limit their investment in the country, and that's why you see probably St. Bots is having problem with how St. Martin will make money because a lot of capital, a lot of money comes into St. Martin because of the currency that they have to exchange because the dollar is stronger than the guildo and also the euro is stronger than the guildo. So yeah, it's detrimental. It's a sacrifice on the people's side because they're not making that much income or that much money to support themselves. They're probably making the minimum salary of probably 800 guilders, but the government or the people need to encourage saving, right? Yes, for now we don't have the so-called infrastructure or the so-called society to create, but we can create that society by just encouraging more saving, encouraging more people to start the saving process because it's a lot more thing I want to say about the island. When you really look at the island, it's like I said, it's not really undeveloped. It's just we never encourage this development because we like a certain situation, and now when hard, we only react to development when a hard situation hit us, and that is bad for the island because we're not proactive. We're more reactive to situation,
Mm.
and that's not a good approach dealing with a tropical island and an island who depends on outside money. You need to be in a proactive um, type of position where you can proactive in the sense of hurricane, because you know hurricane comes probably every year, so that's a seasonal thing. And you know tourists come in seasons, so that's a predictive thing. You know when tourists will come, you know when the bulk of tourists will arrive. So these things you can predict, and these things you can prepare for beforehand. You just need a template. A template is a setup where you have an estimate or a prediction of this is the situation. This is the plan. If the situation doesn't work, this is plan B. So you need to have these type of thing because every quote unquote developed country or modern day country, that's what they have. You wouldn't see, for instance, Holland. You wouldn't see Holland waiting for um, hard wind and heavy rain to come to their country. You would see they're done already using meteorologists information and the data to monitor the weather and have preventative measure that they can deploy when this situation happens. I also in support of people making more money, but we have to think of it like this. If we were to switch to, I know a lot of people want to switch to the dollar, a lot of people want to switch to the euro. If we were to switch to the dollar, do we have a reserve of our own that we can print money when we want in order to balance our deficit? That's no. Does the United States have that? Yes. Does the European Union have that? Yes. But we don't. So if we were to take on the dollar, we can get, because now it will be a one-to-one level. And a lot of our businesses that come abroad, they're probably mostly from the States. And a lot of our money that we get, they come from the States through tourists. And now it's on a one-to-one level. So what value are you creating for the tourists? Everyone loves cheap thing, right? Or affordable thing. But if you put a situation where the tourist now is saying, why, why should I spend my money here? When they're also using dollar and the price is just a lot more expensive in dollar. So what's the value am I getting out of this country? If I mean everywhere we have so many Caribbean islands, everywhere have beaches. Okay, they don't have the plane flying over the beach or whatnot, but everywhere have beach. You're not creating value for the tourists, so they will just go somewhere else and spend their money. So now it become a competition where all Caribbean island, which it is a competition now, all Caribbean island competing for tourist dollars. They're not trying to focus on competing for business ownership or um, group economic. They're not focusing on, so, and this is the thing with certain situations, Martin, is that we need to focus on group economics. We need to look where the money is outflowing. If the money um, is outflowing out our country at a massive rate, then sooner or later we will take on them. So we need to find a thing or a strategy or a plan where we can have money circulating in the country, because now we're making our own reserve, right? We can't print money, but now we're creating a prototype of where we have money circulation, and this money flowing into the country make the country develop to a higher level where the government, so think of it like this, the government will know like, okay, if I spend my dollar, no, not the government, let's say the citizens, if they would say, okay, if I go now and I want to say for instance they want to buy a drink, they will want to they will go and spend a dollar at any shop, right? So now let me use a shop that's international and let me use a shop that's local. If we go and spend our dollar at the shop that's international, that international shop would send the money out. If we spend our dollar at a shop that's local, the money stays in, and only a small percent of the money would go into um how they call it, the
Post.
import will come into import, because we need to import this drink. So let's say this soda can, we need to import it, but only a small percent come out of it, and the remaining percent stay into the country. Now, if all the percent is going out of the country, then there is no circulation of money. So that means you're breaking the cycle, and you making more debt, um, more likely to be applied for. So as a citizen, you need to think about the flow of money, because there are certain groups that understand this, that will never buy from you, um, but you buy from them.
Yeah.
And you need to understand as citizens that it's important for you to have your money circulate in your country, and it's important for you to have your own business, because if the citizen take approach where if each citizen take approach where they can save, right, this will create a lot of benefit to them, where they could start buying out businesses of their own, and probably loan money from the bank, because the bank say, hey, listen, you have a good saving record, and you look like you're a responsible person,
Mm.
and you're more creating jobs, right? And on the island, there's little things that you can do to create jobs. There's not much thing you can do to create jobs, okay? So what you can do, you can look outside. You have a Dutch passport. You are a Dutch citizen also. So you can look into Holland, where you can start businesses in Holland, and that way you can create jobs for people on the island, where they can go to Holland also. So that's also another idea to create businesses. You don't have to look locally. You can look to extract money abroad, to import into the island, to make the value go up, because
Mm.
that's what the tourist is doing. The tourist is taking money from the United States and importing it into your country, but then you're spending this money into international places where it's going back out.
Exactly.
So
Wow.
it's a lot to think about when it comes to flowing of money.
So, that is another podcast show. I like for you to let the people know if they're interested in asking questions, or they could come directly to the page and meet the professionals. Where can people get more information from this interview, or more information of questions that they have personally?
They can message you, and if I see it's common questions that everyone is asking, then I would do a Q&A with you, and we can just answer the questions
Perfect.
other people wants.
Yeah, that sounds great. I'd love to do that. I'd love
Yeah.
to do that. Yeah, man. So guys, I hope you guys enjoyed it. This is the end of the show.